Hi, I'm Kalilah Reynolds, and welcome to another episode of JN Talking Wealth, brought to you in partnership with the JN Group. If you're interested in achieving financial freedom and building generational wealth, this is the program for you, so stay with us. Imagine if your business was razed by a fire, or ravaged by hurricane, or badly damaged by earthquake. These are all possibilities, no matter how unlikely they may seem. Ensuring that your business is insured can help you to recover from a loss a lot faster and less painfully, as you can claim on your policy to recover the cost of the damage or a significant portion of it, depending on your policy and its terms. But despite this, many businesses are still not insured in Jamaica. On this episode of JN Talking Wealth, Lynford Reece, Senior Manager for Distribution and Marketing at JN General Insurance, will talk to us about how to protect your assets and preserve your wealth with insurance. But before we do that, let's turn our attention to the spotlight.
My name is Lydia Sherry Obenem. I am the sole proprietor of a small bed and breakfast accommodation licensed with the Jamaica Tourist Board. So for the ultimate freedom bed and breakfast, our mantra for service is do unto others as you expect. And in light of that, we do take in guests at our accommodation, as you may know and understand. With that said, we have to have insurance to cover our guests. Insurance basically provides coverage for catastrophic losses, uncertainties like fire, water damage, hurricanes, floods, and Jamaica is noted for rainstorms. And with that said, we've been able to purchase insurance through JNGI to provide those coverages. In addition, our guests, in case somebody gets injured on the property, eats some food, gets sick, they're going to be suing us. We're getting a lot of guests coming into Jamaica as tourists here, and definitely they'll be going to call lawyers and suing. So for that matter, we've had to carry insurance. With tourism, Jamaica, you have to be licensed and you have to comply by the rules. The number one thing that they require is insurance. So that helps me meet my compliance requirements with the government of Jamaica. Insurance is key to everything. On an annual basis, policies are renewed automatically. I love that. And certificates of insurance are sent off to the tourist board. I don't have to get involved with that. Having policies with JNGI, to be frank, has provided me with a lot of peace of mind. So I don't have to sit and worry about a lot of things. I'm able to do my investments without having to worry about putting money aside, saving money for catastrophes or uncertainties, especially natural disasters that may occur. Because I do know that I do have insurance and I can rely on the insurer to assist me. I definitely will recommend JNGI to you if you haven't already joined this company.
Hi, Lynford. It's great to have you on JN Talking Wealth. How are you?
I'm not bad at all. How are you?
I am great, especially now that you're going to tell me all about the importance of insurance for businesses. Why is that so important?
The day you decide to start a business, the day you decide to own assets, that's the day you have absorbed risk as an individual. And as an individual, you need to manage that risk.
So you mentioned the day you own assets. Do I have to have a physical property in order to insure anything in my business?
Not at all. You can insure your contents to include your electronic equipment, your laptops. Those are very important to your business. Without your laptop, your organization can be critically disabled. You also have your employees, assuming that you have employees in your business at home. I mean, those individuals are also critical to your business. I mean, if, for example, one of them is injured on the job, again, you have absorbed the risk of employing an individual, so you need to transfer that risk to an insurance company.
All right. So a lot of businesses, especially during the COVID era, we had record numbers of new businesses registering, but a lot of them, including mine, don't have a physical office space or a storefront per se. We work from our home. Our workers, our employees also work remotely. So does that apply to them working at home as well? How does that work? Getting injured on the job, but the job is at home.
It does apply to them. The fact that you have directions as to your time and what they do, and they're employed to you, that is your risk as an employer. And you need to manage that risk. The fact that you're providing them with tools to do the job also, again, there's a risk involved there. Because, for example, if you give them a laptop to work and something happens to that laptop that causes it to explode, while it's in the employment, then that is your exposure as an individual. So you need to manage that risk.
Wow. Okay. So how widespread is insurance and underinsurance in Jamaica?
I don't have the national data, but what I would say is that small businesses tend not to have insurance, adequate insurance in place. Medium to large will have insurance in place, again, because of their capital disposition. But a small business normally tend not to have insurance. And that's where you have most of your exposures.
And what's the reason for that? What's the reason they give you why they don't have enough insurance?
The number one reason is capital. Capital not there to pay the insurance premium.
Expectedly.
Capital. That's what it boils down to. I mean, we start a business with the idea to generate revenue, to create wealth. But in creating wealth, you have to manage your exposure. You have to manage the exposure that goes with your business. You have to protect your employees. You have to protect your assets. And protecting your assets requires you to employ some of your capital and having adequate insurance in place.
So how affordable is JNGI for small business then?
Very affordable, very affordable. I mean, we tend to do a survey to see what's available in the market in terms of rate and ensure that JNGI is competitive. In other words, we don't price ourselves out of the market. So at no point in time an individual will say that they can't afford it because of what JNGI is offering. We tend to have the right price based on what's in the market.
Where does that start?
Again, it starts based on your sum insured. I mean, again, your assets is what drives your premium. For example, you may want to insure your general contents to include your laptop. That starts on average of probably about 1% of the value of those items.
Oh, so it's based on a percentage.
It's a percentage of the value.
Ah, okay, cool. All right. So let's say I insured some of my assets a few years ago, but there's been high inflation over the past few years. Costs of everything gone up. How do I know that I'm still adequately insured now?
Well, as you said, high inflation. Now, for you to be protected against the average clause, you have to ensure that the replacement value of those items reflects the inflationary, in today's inflation, for you to be protected against the average clause, you have to ensure that the replacement cost reflects the current replacement inflation rates. So in other words, if you bought your laptop for 100,000 5 years ago, and today that laptop is 150,000, you have to ensure that your insurance reflects the 150,000 as opposed to the 100,000. Otherwise, that same proportion of your underinsurance will affect you in the event of a claim.
You mentioned something when you started answering. You said protect yourself against the average clause. What is the average clause?
The average clause is a very simple formula they have. Did, in other words, what you have insured your property for, should, what you should have insured it for. So $100 over 150 representing the replacement value times the loss, right? So that proportion that's your average. So you would have insured for a percentage of the replacement value of the item. And that's how average operates.
And that's how you determine your payout.
Correct. So let me give you an example. If you have your building and the building is valued at, say, $20 million, right? And you choose to insure it for $10 million, you have a loss to the extent of $5 million. So it's 10 over 20 times 5. you're getting 50% of that $5 million as a settlement. That's the proportion of your underinsurance. So you'd have insured for half the replacement value of your building.
Yeah, people, that's very important for people to understand because you feel like you're just going to get everything back and then.
No. And if you have a total loss, for example, the entire building is burnt, there's an indirect average applying also. So we will give you up to the full extent of your sum insured $10 million. But guess what? You have to find the other $10 million to replace that building. So average applies in both ways.
So using your example of your building being completely destroyed by fire, it's not just the building. Usually there's stuff inside the building as well. So you have, like you said, property, you have equipment, you have different things, furniture inside the building. Will you also replace those things that were inside the building, the contents, or is that separate?
When you decide to insure your assets, your building is one of the assets that you want to cover, and also your contents. You have to itemize what you want to be covered for the insurance purposes. In other words, there's the building, you have to give us a value for the building. There is the contents, you have to give us a value for the contents to include electronic items as well. So once you itemize those assets, if you have a fire, then they'll be replaced in the event of a loss.
All right, so speaking of contents insurance, is that something that anybody can buy or is that only available for businesses?
Anybody can buy contents insurance. In other words, there are options available for individuals. You can insure your building alone as a business owner. You can insure your building and your contents. You can insure your contents only as a business owner. So again, you have to determine where your capital can take you. In other words, what's your disposable income as a startup, as a business owner? Can you afford to insure your building? Can you afford to insure just the contents only? What is it that you're looking to protect in the event of a loss? In other words, your contents, your loss of revenue, or your building.
So people often complain, and you mentioned it earlier about small businesses, but everybody complains that insurance is expensive. What's causing that price or those prices to go up so much in recent times?
In recent times, I would put it down to climate change. It sounds a little cliche, but every property that is insured in Jamaica, 90% of that property is transferred overseas. All right? So your building is insured for $10 million. $9 million of that is transferred overseas to our reinsurers. These reinsurers have insurances worldwide. Florida, Germany, everywhere over the world. So as much as Jamaica may not have had a major disaster, because we're sharing in the same pool, once there's a disaster outside of Jamaica, we're also contributing to that loss as well. So recently you had some major flood in USA. We weren't affected, but because we're sharing in that same pool, the price of insurance also affects us in Jamaica as well. So you as an individual may say, well, why am I paying for that? It's because we don't have the capital as Jamaica to absorb that risk, right? It's a transfer of that risk to our international partners that drives the price that we pay locally.
That whole reinsurance.
That's the reinsurance aspect
I've been hearing about
of our
that.
business.
Been hearing a lot about.
And I tell you this, I mean, for this year, we had problems getting reinsurers to offer us capital in this region because it was considered that the price was not right. Right? So the cost of capital, again, is very important for us, you as a business owner, and also for the reinsurers overseas also. So if the price is not right, they're not going to give you their capital.
And that's just raising the price for all of us.
That's raising the price for everyone.
So in this economic climate, then, what strategies do you recommend for businesses to manage those payments?
I would say to them, there is what we call insurance premium financing. That is the best bet for medium to small organizations. Large organizations do it also to manage their cash flow. But for small to medium, insurance premium financing is the best bet.
And what is that?
That is a mechanism that's in place whereby you pay a percentage of your insurance premium upfront to start. So, for example, your premium is $100, you pay 25% of that $100 on day one, and the 75% is paid over a 9-month period at a small interest rate.
Well, we'll learn a lot more about that in another episode, but thank you so much, Lynford. So you can recover quickly, it's necessary for your business to be insured adequately. If you need further information about any of the products and services discussed in today's program, please contact the experts at JN General Insurance. Also visit jngijamaica.com and jnbank.com to learn more about how their products and services can help you achieve your goals. Now for our giveaway question. Give 3 reasons insuring your business is important. The first person with the correct answer will receive a gift certificate valued at $50. Good luck! That's all the time we have today. Join us again, same time, same place for another episode of JN Talking Wealth. Remember to like, subscribe, and share this video, and follow JN Bank on all their socials. I'm Kalilah Reynolds. Until next time.